Welcome back this Friday morning on CNBC's Cash Flow. The Korean market in late session trade in Seoul is still soft, down 0.3 at 1364 and change. And the KRW, the Korean currency, is steadier against the U.S. dollar by 0.1%, 1341.70. Earlier this morning, Asia's number 4 economy managed to narrowly avert recession, helped by government spending and also aggressive rate cuts. The Korean economy grew 0.1% on quarter in the first quarter. That was in line with forecasts. That's compared with a 5.1% contraction or shrinkage in the fourth quarter of last year. Daniel So is a regional economist at Forecast. He joins us here on set. Dan, did the numbers surprise you at all?
Yes, of course, it's in line with market expectation, but the number really look encouraging in the sense that South Korea economy may prove more resilient amidst this current global deceleration. And I will not be surprised that South Korea may actually be one of the better performer, Asia performer in this year.
Okay. In other words, you're saying that what the government has done so far, aggressive fiscal stimulus, also aggressive rate cuts, it's worked and it's enough, or is it more needed?
If you look at the fiscal stimulus, it's very important because South Korea is one of the few Asian economies who actually kick off a expansionary fiscal stimulus package since 2008, when all the Asian economies are grappling with overheating risk. So all these things are going to fit through over the last 1.5 years, and so they will come in time to mitigate most of the damage done. Of course, the monetary condition index, if you look at the weak exchange rate and the record low interest rate, it means that there is so loose in the economy. Right now, because of some concern about default, so there will be still a liquidity clot. But down the line, when things stabilize, this burst of excess liquidity is going to stimulate a robust recovery.
I see. So bottom line, no more rate cuts, or?
I would say no more rate cut, but the Bank of Korea is unlikely to openly say that there will be no more rate cut because they has to show their willingness to do something to support the economy in case things prove to be worse than expected. And they are not going to do something like they say there's no more rate cut, and in the end they really endorse a rate cut. It's going to hurt sentiment even more. So right now they're going to leave the rate cut option open, but market is actually factoring no more rate cut and maybe even a rate hike for the next interest rate move.
Interesting. Is that priced into the currency, the KRW 1340? Is there good support there?
I would say the currency for the dollar won, in 2009 will be fluctuating between 1,200 to 1,300 around this range. So, but right now there's sort of cautious sentiment because they are looking at the sustainability of the recent world market rally. They are saying that there may be a correction, hopefully correction, not another major sell down. So there's some dollar demand because signaling that the risk aversion is pretty high, still pretty high now. So no matter what, South Korean won is still one of the riskier Asian currency, high beta to external shock. So this actually restrict the gains in the won.
Okay. All right. Interesting. Whatever risk there is to the downside still for the won, I mean, this is important because we've talked about this before here on CNBC, and that is the foreign debt obligations, especially that Korean corporates are burdened with. If the currency continues to sink, it's going to cost them a lot more to repay that debt. How much of a risk is there on that debt?
The risk will always be there because of the huge exposure. Because if you look at the financial mobility index in terms of the foreign exchange external debt, short-term plus long-term, over the foreign reserve, that's the government ability to mitigate the risk if there's a sudden mass exodus of US funds. So it's actually 0.94. So it's actually the highest across all Asian economy.
Oh, interesting.
So yeah, this risk will always be there.
Okay. All right. Listen, Dan, we got to go. Great to talk to you, sir. Thank you for your time. We've been talking to Daniel So from Forecast. CNBC's Cash Flow is coming right back.